All right. Good morning, everybody. It's Tuesday. Hoorah. So it's a pretty quiet day other than a lot of Fed speakers. We had a little bit of rebound around the world, which helped quite a bit. Even China is up, and it's been a while since we've been able to say that. Our markets are also doing relatively well, all things considered. We're in the lower portion. If you think about how things open around the world, it starts with Australia, then we're into Asia, and then Europe, and then us. So this continuation boon from yesterday is bleeding over into today, and our markets are making a move up off of that. We'll dig into what sectors and all of that. On the calendar today, existing home sales has the highest anticipated impact within the regular trading hours, and then after hours around the world, we do have some others that could carry a little bit of volatility with it. But the Goolsby here, that's the new Fed guy. Always makes me nervous when a new guy gets in there, how easily he could make a mistake, foot to mouth, say something he didn't mean to say, or in a way he didn't mean to say it. And you would think, oh, yeah, that can't happen. But there's been times recorded throughout history where they've been, say, speaking in front of the House or the Senate and saying something that they didn't intend to say, or at a luncheon, a dinner, an offhanded comment to a reporter. It doesn't take much. So he'll be speaking today. And otherwise, we're just trying to hold the line, right? We've stopped falling. We're turning around. We've got a lot of bounce setups and TRB setups. We just need the follow through. We do have additional auctions at 11 o'clock and money supply at 1. And after that, you should be good to go with your 0-day trades. All right, so we're still considering that last week was a bounce off of the 20-week, even though we didn't technically hit it. And we're working our way back up. Yesterday, I discussed 50% as a line in the sand, that if we were to consider the market in a downtrend, right, or in a downward impulse. So we move up, we pull back, up, we pull back, up. Now we've really pulled back, right? Kind of a line in the sand. Now we've started to make our move up, and this 50% mark kind of defines how far this pullback should go before it starts to get into a level of it's gone too far to be a pullback. It must be a resumption of the move, at least back up into these highs. Until it gets above that level and closes above that level, this is still nothing more than a pullback. Until proven otherwise, that's the assumption, that it's just a pullback before continuing lower. Now, I personally don't believe that we're going lower. I think this is the bounce we've been looking for, and that we're going to go back up from here. I've been talking about it for 3 weeks now. The old days pre-COVID, where the buy the dip mentality would come in, and generally it was somewhere between 5 and 7% of a good, clean, healthy pullback, kind of a nice reset, right? Well, that was a 6% move from the peak to the trough here, 6.14% by the dip. Now, until proven otherwise, I'm not right yet. Right, still need to be proven right. It needs to get above this 50%, close above it, and continue on. But so far so good. So that level is 44.33.88. We can't use 88 on the ES, so we either round up or round down, and I'd rather round up. 44.34. It's a nice simple number to keep track of. We need to get above that level and keep it. I've got a line already there, 44.35. So that's good enough. In the pre-market this morning, that's exactly where we are at. It's what we need to deal with. Volume is normal, sitting at 93.8. That's well within our boundaries of what normal should look like. So we can just get that thing out of the way. We don't have a market maker move or anything else that would be concerning. We do have a 10-period moving average coming up. So this is a 10 EMA on the daily. Just jump over to a daily here and kind of give you that image. The blue line here on this blue chart to the right side, 4444.5. So if we continue this drive to the upside this morning, we're going to hit that 10-period daily moving average. And that's going to act as a little bit of resistance. There is very likely going to be some form of reaction out of the market. Just remember that we don't use these like they are support or resistance, right? We wouldn't look at that, say, back here when we hit that blue line, that 10-period moving average. Here's a perfect example. So price ran up, it hit that 10-period moving average, it was rejected, and down it went. The anticipation is that price is going to react at that level, either consolidate underneath it and then break through it, reject off of it like it did, maybe break up through it, fail, and come back down. There's going to be something, right? And that lines you up for a trade, because while you don't exactly know which one of those things it's going to do, if you have a plan for each one of those, once it starts to unfold, you have your trade. So for an example, once it broke to the downside there and the candle closed as a bearish candle in the lower portion, mark that 50%. Look for your opportunity to take a short. As long as it doesn't get back above that 50%, you're good to go. Right? On the idea that that would be a rejection play. We're going to have that same opportunity again today. If we continue driving to the upside, we are going to very likely make contact with that 10 again. We can see that it doesn't always respect the 10, or that it's not going to stop there on a dime, because while this previous example was a nice perfect rejection, this example was not, right? Punched right through it like it wasn't even there. But there was a first touch play. So it did get there once and reject off of it and then try it again. So even a first touch play would have netted a couple of points. It's what we have on the table, so we want to anticipate that, right? This is a part of that top-down approach that you want to try to get in the habit of doing. What's on the monthly? What's on the quarterly? What's on the weekly? Is there a moving average that we're going to hit today? What does that look like? Where is it located? Right? That way, you've already got an idea of the things that we could hit today. It doesn't take very much time to go to the quarterly chart and write 1 or 2 sentences about what you see. and then go to the weekly and the monthly and the daily, each one of those charts with 1 or 2 sentences, by the time you get to your hourly chart, you've got a paragraph already developed of things that you could be on the lookout for and things to anticipate or prepare for. Then you can use something like the scratch pad the whole time to write those things down. That way, they're not cluttered all over your chart until needed, right? "10-day, 30-minute volume profile. When we're at the highs, we expect to go to the lows. When we're at the lows, we expect to go to the highs." We did make it through that second volume shelf that we had talked about yesterday. And now that we're above it, we're back into this shallow area all the way up to the point of control, 44.88, basically. So we do have that weekly level. It stands out well on this chart compared to where we were looking at it earlier. We don't need that line anymore. We just get rid of it. And so that's going to be the target for today if we continue this drive to the upside. We're going to aim for that point of control. I mentioned it yesterday, but I'm going to continue to mention it every day this week. The top of the profile isn't going to come down to us this week because all week we have price up there. So either A, we don't go up there, turn around and fall down, or B, we just kind of hold the range, but still don't go up there. And if we don't go up there this week, on Monday, we're finally going to start to see some compression, right? Maybe afternoon or maybe into Friday, we'll start to see it, right? Because we'll wipe out that Thursday high. So by Friday, the high will be 45.17-ish in the profile at that point. So we'll lose a little bit, but not until next Wednesday would we actually start to see the profile below 4,500. And that's if we don't go back up there between now and then. All right, so here we're looking at the 5x5. Generally call this mapping out the 5x5. We have a volume profile now from yesterday, this VPOC. So we want to mark that. Don't need to zoom in and get all nerded out perfect on it. Just, get it within a tick or two. 43.87 for the VPOC. And we're going to put one up there from Thursday. Even though this morning we're hitting it, we would have taken it off the table. I'm going to leave it on all day in case we pull back, and then we'll take it off tomorrow. I think when I was deleting lines the other day, I got a little too happy with the delete button and took that one off the table. But we are getting tangled up into it this morning. So we can see price did react or respond to that level. If we pull back, I want it on there through the day today to see how it looks. Otherwise, we'll delete it tomorrow. So we've got VPOCs everywhere, one below it, one above us, and the one that we just interacted with. Nothing else is really standing out. We spent the most amount of time in the lower portion, so it makes sense that we have the most volume there. we can see we were getting an elevated volume level right at yesterday's high, which makes sense, right? When you're trying to get an inside day breakout, you're going to see a significant level of volume there. But now that we're through it, there's nothing else there, right? Nothing really we got to worry about. All right, as we talked about earlier, we're very close to the 10-day moving average. We've completed the wave or the cycle, and we're nearly back to zero. We continued the drive to the upside this morning. We should get back above it. That makes sense. Since the rally is so far expanding nicely over the last 3 days, reasonably good, clean closes over the last 2 days. And we should get at least one more. Notice, however, we are on the edge of the weekly expected move this morning. So that's a little something to be concerned with. 44.39 and a half. That's where that's at. So 44.39. It's not too far off, right? 44.39 and a half. Just a couple more points. All right, the 10-day and the 10-week were just about the same distance from both, which I don't know, it's not unusual or uncommon, is what it is. The main things we want to focus on at this point is that weekly expected move. We can get outside of the box and still close on the week inside the box. So don't think that this owes you a reversal just because we're at the edge, right? That's not exactly how things work, but they will try to keep it in the box. We can see, for an example, where we broke out back here after having the same kind of pullback and the same kind of doji reversal and multiple days run to the upside. On day 5, they finally paused. They didn't drop it and run it back to the box, right? So now we've got the doji. We're on day 3. We're just getting to the edge. We could still have day 4 with another big green day, and then day 5 with the sideways day. The 5-bar rule sounds overly simplistic, right? And yet, a lot of research on that. Things that are up this morning, KWeb is up the most with the China ADRs and very likely also the China EVs, but we'll check those EVs first before we really say that. And then the FANG names continuing from yesterday, starting to get some semiconductor assistance, technology behind that. Really not seeing those financials way down here below our 50% level, right? It needs to get at least up 0.5%. I'd like to see some help out of those so that it's not all just tech and semiconductors that is carrying the move. Bitcoin is flat or down, so no help there. And nat gas solar, regional banks, they're all either flat or negative. So no help out of that at all. So I think the idea here, we're just going to jump through a couple of these real quick to see which ones are even worth looking into a little deeper. That'll work. So we got Tesla here, continuation of really Friday's start into Monday, carried over into Tuesday. Nice gap in the overnight. It's holding it at the moment, still pressing against those highs. On the chart to the right is the daily chart. We can see that 10-period moving average, 234.42. We're not there, but we're over that, right? We're up another $9 past that. So where Tesla's at this morning is actually closer to the midpoint between this 10 and 20-period moving average. We're sitting somewhere right about there. So from a TRB standpoint, this is a nice follow through so far. It's going really good. We do got to be concerned about that 20-period moving average at 247. It's worth marking that one out. And then if obviously if we continue to go, we got the 50-period, which is the orange line. That's a long ways though, and I wouldn't expect it to go from 230 to 250. Can it? Yeah, it absolutely can do that. Just to give you an idea of its range of motion right now, Tesla's got an ADR of $8, and we're way past that at this point. We can add the market maker move right now with another $6. And even if we added up the change and gave that another dollar, it's still got plenty of move left in this thing, right? It's exceeding everything that we've got. So I would be a little cautious there of a reversal, since it already has moved so far, but we don't try to sell the trade here, right? Not, how do we say this? Don't short it just because of how far it's gone, right? That's the mistake. You don't want to make that. I see that one all the time. Oh, well, it's already run so far. I bought some puts. Really? That was the only reason? Because it moved really far? Probably not a good idea, right? And of course, it'll work 50% of the time. So as long as you're okay with that, cool. Measure the range, mark 50%, and mark 100%. What we marked for the range was yesterday's highest point to its lowest point. But honestly, we could really back that up all the way to Friday's close into yesterday's highest value. That still kind of gives us a little better understanding, or a better idea of how far we've traveled, right? How far we traveled yesterday and then where we're at this morning. So that gives us a line in the sand at 240.5. And it also gives us one more leg up to 248.78, which is just past that 20-period moving average. That's one heck of a move. And I really don't see how we can get past that today without starting to break things, right? Because the market really shouldn't go too far beyond its measurements. When it does, that's when things really start to break. So that's Tesla. Nikola, on the other hand, had gone against the grain yesterday, right? And it's kind of worth taking a look to see if we got anything out of it this morning. We don't. And in fact, it looks like it wants to continue lower. So if you're looking for something that might be ready to flip over, this could be it, but I would really approach this penny stock with caution. Lee, doing the same thing as Tesla, continuing that move to the upside. 10-period moving average at 40.80, which is sitting somewhere up here. So we're not there yet. We're not going to hit it yet. Not a big deal. But if we continue to drive upwards, that is going to be a big deal. It's also a pivot point from this day back here. Right? So you've got two pieces of resistance right there at that 40.81. XPEV, another one. That doesn't look as good, right? If we think about how good Tesla looks this morning and then how good Lee looked, this is kind of a dud. We're still sitting inside of yesterday's price action. It hasn't even managed to do better than that. If we do get out of that, then we do have the 20-period moving average 1788. And that, considering how squishy this one is, that's very likely going to be the end of it. All right, Baba's up and running. We almost got to $90, but almost doesn't count. We have the 50, the 200. Well, we got all the moving averages overhead, and we're a long ways away from the 10. So it makes sense that we're trying to go back up. Just keep in mind that that's very likely the only reason we're going up here. And there's no sustainability. That's the word I'm looking for. There's no sustainability to that, right? At least not yet. Prove me wrong is usually the phrase that I like to use. This is what I think it's going to do. Prove me wrong. And hey, I can't. It manages to do that more than I like. Baidu, same thing. Big stick creates a flag. 131 is the level that we want to focus on. That puts us like way up here above or around this 200-period moving average. So, we think about how the different moving averages represent health and strength. Being underneath the 2 and then being underneath all these other major moving averages and being that far away from the 10, this was due a move up. But 1, the options on this thing are trash. 2, it's a gappy bugger. So it moves more in the overnight hours than it does in the regular trading hours. And 3, this is more like a reflexive pullback than any kind of move up, right? So this is very likely just a rally into resistance, getting a little bit of a running start, right? Like when you're trying to get through a door that's sticking, you back up, put your shoulder into it, right? And get a running start. Well, if this is looking to go to the downside and it found a little bit of resistance to that move, or it found some support to hold it up, however you want to look at it, then it very likely is just backing up to get some momentum to continue the move to the downside and break through that resistance or through that support. Time will tell, but either way, this really isn't a great vehicle to trade anyways. Out of all the ADRs that we could focus on, that one with its poor option structure really just isn't the best choice anyways. We got JD up this morning. It's looking pretty good. It's also a lot cheaper than some of these other names that we've been focused on. $36 is where the 10-period moving average is. Just kind of rounding a little bit. It's close enough. We had a gap that needed to be filled at 34.78. So that gap will be the target, 34.78. If you want to continue to go to the upside on this, what it really doesn't, what we don't want to see is we don't want it to come back down and get below yesterday's high. We don't want it down there. but we could see a little bit of a pullback, which would be nice for a trade entry. All right, so say we get a little closer to the open, we get that bounce off of yesterday's high, and then we get the rally. That would be a gift. I don't expect it to actually do that, but it would be a gift if it does. More than likely, it just kind of fades a little and then runs up and retests this high, which will hold or it'll break, right? If it holds, we dump. If it breaks, then we go for that gap close. 34.76 is the first one. If we can get through that, then we'll try to get up to the open of that day, 35.5. Nice round number. And all of these, right? The EVs and now these China names, they're all the same basket, even if it's just a tangent connection, right? So just kind of keep that in mind. When you're trying to approach these trades today, you can watch KWeb, EEM, and yeah, I mean, really just those two would be my go-to. Watch those to see if you start to lose the China ADRs. And then for the EVs, I don't know, you just have to keep jumping around through all of the different names, continue to keep an eye on them, right? That's where watch lists and heat maps really come in handy. All right, so the last one in the group, PDD, the same thing, big gap up, continuation over the last few days. Got a gap to close that this one did. Now, some analysts will say it doesn't count because it happened in the pre-market. Okay, I mean, I'm of two minds of that. I really like to see it get there and whatever time it happened. So just like with the VPOCs, I'm considering this gap closed, but I'm going to go ahead and leave that line there until the end of the day because I want to see if price responds to it again. As my take. So at this point, it needs to hold the level. The thing is, though, it could get weak and fall all the way back down to 78, and it still wouldn't be failed yet. It needs to actually get back inside of yesterday's price before we consider this failed. And that means there's a lot of room here for error, and that sucks. So if we get into the open and we're still above that line, that 79.66, we need to keep it at that point. But you know, that's after we open anyways. So semis are on that list of what's up this morning. The ETF itself isn't really up that much, but we do got NVIDIA, dun, 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 which has earnings this week, tomorrow. And you wouldn't think that it has earnings so soon, considering how much it's moved over the last 2 days, right? When we talk about a run up into earnings, this is a little bit exaggerated, but it's kind of what it looks like. Just approach this with a little bit of caution, right? There's a lot of reasons to believe that it's going to have a great earnings and that it's going to yet again blow out and actually get repriced for somewhere around the 530 to the 550 area. This isn't the format to talk about how we evaluate a company and blah, 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 right? So I'm just going to tell you to go do some due diligence and look around at the anticipated value of the stock, right? What it should be priced at versus what it is priced at. It wouldn't surprise me that by the end of the earnings, we have new data and new information that suggests this is worth more around 530 to 550. And we will see it move in that direction really fast. But there's also the sell the news kind of thing, right? Buy the rumor, sell the news. And if this is a part of the buy the rumor, then after we get the news, we're going to get the sell, right? So don't get all bowled up in that thing just because SIG said 530. Got AMD. It is up, but it made one leg up and then it just basically paused there. That's an algo look, right? When the algos reprice the basket, I mean, they just hit every single thing that's in the basket, popped it up, and there it sits. Unless it has a reason to move it, it's going to stay there, right? Or unless, somebody else comes along and moves it. So I'm not seeing AMD as all that bullish, other than the fact that it's up this morning. We do have the 10-period moving average now underneath us. So that's a good thing, but it needs to prove it. And remember, moving averages aren't support or resistance. They're more of a reflection of where we're at. Okay? If we're above it, the market's considered to be healthier or stronger, or use that kind of language. And when we're below it, then it's weak, negative, that kind of thing. Just getting above the 10 is a good start. We still need the 10 back above the 20. We need both of those above the 50. And obviously we got a long ways to go before we're going to get any of that. We do have things that we can measure though for AMD. One is yesterday's price. So resistance at 110 and then 111.50. And just like we did with the other market, we can actually measure from where we closed, not just from the low of yesterday, since AMD didn't close that gap. So if we think about where we closed on the 18th and then the high of yesterday, that adjusts things just a little bit, and it gets us above that 20-period moving average up there. 111.22 is the 20-period. AMD can make that in a day. That's not too far. We can see we got an ADR of $4.25, so that's not a problem. Right? We could end up at 113 all the way to the 50-period moving average, if that's what it wants to do. You can do it. All right, EVs, China ADR, and then cryptos. So Riot, Mara, Coin. Oh yeah, definitely Coin. Nice flip over. It looks very much like those EVs and the China ADRs, right? But we still have $80 as resistance. So while we're sitting at around 77, if we continue this drive to the upside, we've got the 10-period moving average overhead, and it has held as a line in the sand for a long time, right? You can see it's nearly a perfect straight line, and we haven't been above it for a while. So it was a drastic, extreme move to the downside. This move up is very likely nothing more than a little bit of mean reversion, linear regression. It's just a pullback, very likely, before continuing to go lower. But until proven otherwise, we want to trade the pullback at least, right? Crypto is actually doing better than semiconductors. So while we looked at NVIDIA and AMD and SMH, crypto is doing better than them, at least as a group. Then we've got communication names, say Facebook, Google, Netflix, Disney. Surely not Disney. Yeah, okay, we got a little bit of Disney. I mean, that's just about the choppiest, nastiest thing we've looked at today. But, you know, for a legged in iron condor or something like that, it's not a bad choice. I mean, look at all three of those moving averages going sideways. This thing is an advertisement of just theta decay, right? Burning away people's optionality. So why not, right? Why not be the seller? But after that strong move to the downside, there's really nothing here that says that it's going to owe us some sort of recovery back up. So approach with caution. Netflix is on that list. Again, that's an algo pump. It just moved it, repriced it to that location. Now there's no other flows here to make us believe that it's going to continue to go. And we're just sitting at an inside day breakout at this point. So with Netflix, it has a market maker move. It could very easily get to 420 today, no problem. I mean, that's well within its grasp. But so far, there's no flows here. There's no reason to believe that it's going to make a move. Not yet. Google, another one. Now, this one not only got repriced by the algos, but it's actually got flow behind it. Not a lot, but it's a good start. We're above that 129 line in the sand. This thing is all over the place. When you get a chart that looks like this, and it's just that much chaos, your best bet is to go to a higher time frame, right? Go to a weekly, go to a monthly, and there's a drawing line here, the R regression line. Just start at the start of all this trash and then go into where it ends. All right, and that kind of cleans things up a little bit. Or do another pull, right? This thing is like all of the market moves in waves. We're either moving in waves to the downside or we're moving in waves to the upside, but we're always moving in waves. We've completed the lower leg here of that wave. It's due at the very least to give us a wave up. Just as these previous examples show, it doesn't have to happen right away, right? It can get to the top of the wave and then it can screw around there for 4 days before it finally goes down and gives you the other side of the wave. So don't look at this today and say, well, it owes me a run to 131 because we made the lower leg and now we're due for the upper leg. We are due for the upper leg, but it can jack around there for a while before it finally decides to go up there. So just, we want to see some flows, right, as we get closer to the open. The thing about flows today is that the rising tide argument. Looking at everything that's up this morning, it's almost easier to talk about what isn't up this morning, meaning the flows are going to be scattered across everything. Put a little context to it. How many names in the S&P are up at least 0.5%? 19. Okay, so we can say that differently. 19% of the S&P is up 0.5% this morning. That's not overly bullish, by the way. So I like that number. But what about the NASDAQ? How many names in the NASDAQ are up at least 0.5%? 35. Again, I like that number. It's not too much, right? It's a little bit, but it's not too much. So 35% of the NASDAQ is up 0.5%. Out of that group, what do we have? What's their industry? What's their sector? So start breaking it down. We can see semiconductors really are a large part of that 34 names. MU, ON, AVGO, ENPH, AMD, NVIDIA, and GFS. So all of those, right? And Qualcomm. Okay, I missed that sucker. Marvel. So a lot of those. And then behind that, we've got the motor vehicles. We got some packaged software. Was it like junior tech stuff, right? Then the internet, retail, and just kind of spreads out, from there into these one or two names here and one or two names there. But we want to focus on the ones that with the biggest amount of names, and that's semiconductors and say packaged software and internet services, right? Those FANG names and monsters of tech. Names that are up more than 1% this morning. Technology services holds the weight there. but it's a lot of the FANG names. We can see Microsoft is up more than 1% this morning. So is NVIDIA and Tesla. That's 3 FANG names in the list. My poor little puppy just coughing and hacking down there. I don't know if you guys can hear him, but he doesn't feel good. All right, looking at the S&P, 1%. Tesla, NVIDIA, Microsoft, same 3 names. And then just some rando junk, Lowe's and Emerson. So it's going to be the FANG names, just like yesterday. If they're carrying all of this market, what we want to be watching for is that the other names start to join the fun, right? Junior tech names and then other industries, other sectors. We don't want the entire market resting on those FANGs. We've still got a disconnect, by the way, going on between what's happening with the Dixie bonds, the 10-year. So the bonds are up off of those lows, but they're not turned around and moving up, say, the way that the S&P is. We're just up a little bit. I would say this looks more like how we looked on Friday into Monday. It's almost like they're a day behind, right? Looking at US dollar Japan, we are back below my monthly level. And it looks like we got a Busby formed off of that. So a nice pullback. Still looking for this to continue to the downside. 145 is still the target. Let's get back below that September 22 Bank of Japan intervention level, right? And with the 10-year, we're back below that 4.326 level. That's a start, but we want to get farther away from it. It's too close to the door. Right? Just kind of back away nice and easy, no fast, sudden moves. As this continues to fade off, we want to see these bonds get away from those lows and get back up there again, right? But again, nice, slow moves, nothing too drastic or extreme. Something a little concerning is the disconnect, say, with the dollar. We can see this move, for an example, this rally up since about 3:30 this morning. And yet we had the 10-year moving down through that time period. So, I mean, I don't know what to do with it, right? Other than the fact that we recognize it, we say, hey, this isn't doing what it's supposed to do. And we just set it aside and don't use any signal off of it. Just kind of recognize it, acknowledge what it's doing. What does a rising dollar imply? Or what does a falling 10-year imply? And we can use them individually for that purpose without putting them together. This is the best we can do at the moment. Things don't always do anything, right? There is no always in the market. The only always that I know is that if you let your guard down for a moment, the market will always take your money. That's about the only always that I know of. So we are risk on, full bull mode, and that's what we want to trade in until something changes. That this dip has been bought, and we have no expectation of it ending anytime soon. Just keep in mind, we do have Jackson Hole Friday, and we do have economic data coming that could perhaps squish this a little bit. We didn't see some fabulous stick save. They didn't come in and play save a hoe or anything like that. And bonds are still in a lot of danger. So there's still risks. There's still reasons to believe that we could get tangled up around that 10 and continue to move to the downside. But until proven otherwise, we trade what we got, right? Not what we think we're going to get. Everybody, be careful, be safe. Have a good day, and I'll see you all tomorrow.